Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Hold up, my lights are still a little messed up. There we go. All right, well, I'm sorry I'm a little bit late. I guess I lost track of the time because I thought I was going to be right on time. But anyways, we did just have for durable goods. And, there was a little bit of movement around it, but overall, I'd say the treasuries are pretty stationary. So let's come and look at the charts. So here's a treasury. You can see that they basically retrace all of yesterday's downside and then kind of settled back down a little bit. I think some of that selling may have been the Bank of Japan yesterday. So we kind of got to be vigilant today. All right. Now S&P 500 doing okay. First, a bit of an uptrend in a day or two. Oil had a decent little jump there yesterday. Of course, they've got a ways to go at 83. And we come over here to the daily chart. You can kind of see, well, they could still go all the way up to 90. Very difficult to stay above 90. But that's kind of where this market is at right now. Gold and silver having a bit of a jump overnight here. Oh, interesting. And copper, what about copper? Maybe not copper so much, huh? All right. And the 6J just continues to skid along the bottom. I think that this is going to go boom. I think that the Bank of Japan is going to come in and do something. It just looks primed for the Bank of Japan to come in and do something. Maybe I'm wrong. And then we've got Bitcoin. Bitcoin a little bit higher yesterday. Nothing too crazy though. I'd say about in line with what things probably should be. Okay, so let's come in here. I think that I screwed up my template or something because didn't I have like there we go. All right. I don't know what to put down for a summary, introduction summary today, but number one flow, we're looking at Bank of Japan. Intervention possible. Number two, I'm going to say small impact. Small impact. US durable goods better than expectations. What else we got? Do we have any other big ones? Okay, so we do have consumer confidence today. Medium consumer confidence. Actually, let's say large. Let's say large impact.
Block sell.
Medium house price index. And then we have a 5-year auction. Okay, and that's pretty. And then the other thing I gotta look into. So I saw on my headlines here in the morning Port of Baltimore paralyzed after container ship strike collapses bridge, but I didn't have the time to really read into it. ABC notes or news reports the Singapore flagged Dali container ship lost propulsion as it left the port of Baltimore just before it rammed the Francis Scott Key Bridge. Wow. Authorities are downplaying the risk of foul play here. There's all sorts of conspiracy theories around it already. But will it have supply disruption? I'm gonna say like this. Baltimore Bridge collapse. All right. By the way, good morning, Robert. Well, I don't have much else on there. I'm finding it very, very curious that we're getting some pretty strong selling out the gate here. There's Uzi. Good morning. Cocoa hyperinflation strikes before Easter. Prices surge to new record high. Oh no. I haven't bought Easter candy yet. Right, have we? So are we buying some DJT? Oh, I don't know. Have they changed the ticker yet? Did they change the ticker? Let's come over here and look at a couple of things. So yesterday, we did look at the options for Reddit, and I kind of anticipated that you would see a lot of put buying. And you know what? You did. You did see a lot of put buying, all at the lowest strike price available. But if we come here to our chart, hopefully I still have the right one. Yep. You come over here to our chart. Reddit did pretty dang good yesterday. Look at that. Like, we were up here and I was like, there's no way I'm going to get filled. I got all the way up to here and it didn't get filled. That sucks, huh? But Reddit, and it's up in the overnight action too. So Reddit is pumping hard. Here's the thing. The shares that were offered was not a whole lot of the total shares. So I think that this thing could potentially do what it's doing right now for at least 3 months. Like 180 days until like the lockout period ends, and then you're probably going to see insiders selling. The way this thing is structured just looks like a cash grab to me, so I'm a little bit worried about holding Reddit long term. Okay, now DWAC, DWAC. It does not show up. So did they actually change the ticker? No. Maybe when things go live, we will see it. PayPal won't be messaging for a while. Intern got killed by a storm. Oh my gosh. Wow. I'm so sorry. My facial hair is tickling my face again today. Well, we'll definitely check it later. Maybe when the S&P 500 opens. I'm a little curious about this selling in the treasuries again. I don't know if it has to be a major thing, but it was a pretty decent flow of about 8,000 contracts to the downside after a little bit of a jump and kind of back and forth from the core durable goods. So I don't know if that was related to durable goods or not. I kind of suspect that it was not. But I need to keep myself on alert here a little bit better today. Because if Japanese yen action does come in, it'll just be like, whoa, right? His 16 was kind of that price from yesterday, wasn't it? Let me see here. Coming back. Well, they touched 15. But yes, that was a pretty key price from yesterday. Does seem like an awfully, I'm not going to say an awfully strong flow, but a lot stronger than I would expect to see out the gate here. So there's definitely something going on. And when I see that sort of a thing, you know, it's going to make me very wary about buying. Of course, the way that things have been going lately, it could totally just retrace that whole thing. But I don't really like the reversal trades. You know, I want to see continuations for the most part, so. Okay, the S&P 500 is selling pretty hard here. What's with that? China iPhone shipments fell about 33% in February, state data shows. Could it be Apple? Apple plunging? Ooh, yeah, that they're taking a dip there. And if I come and I look at somebody like, let's say, Amazon, how are they doing? They're doing fine. So that sell there looks to be related to iPhone. Very interesting. iPhone shipments in February in China down 33%. That is interesting to me that a 33% decline in one country affects Apple that much, because that's about, well, let's see here. It's a little bit more than 1% decline just off of that. So that's pretty serious, I think. A lot of order flow going off here in this 16 area. It looks like another long day since it's showing a big extended. Well, so just be aware that the down move appears to be driven by a story affecting Apple that says that Chinese iPhone sales were down 33% last month. I think that's why they're dropping. You got, the big, the Magnificent Seven. One of them is falling in the pre-market. That's kind of hammer. And I don't think, I could be wrong, but that's a materially negative story for Apple. So I don't think that that's one of those, they just retrace it on the open sort of thing for Apple. And so if Apple doesn't retrace it, I don't have a whole lot of confidence for the rest of the market. We're also seeing some pretty heavy selling in the treasuries. So if we're seeing interest rates going up, that tends to weigh on the stocks as well. So I'm not so I guess the larger thing that I would say is we need to look at the flows. What are going to cause people to buy or to sell today? And there's so many of them over in the ES, I can't even guess. But don't just make an assumption that, well, because we tend to be in an uptrend and we're down in the pre-market, that means I should buy. That's way too simplistic of a strategy to really work out long term. Apple can make the whole market crash. It absolutely can. The stock leadership is so narrow right now. A bad story for any of those 7 just really, really holds the rest of the market back. Granted, you could see other stocks do okay today, but the index is still going to be down because Apple's such a large part of the index. Oh, are you trying to send me a message, but Discord isn't letting you? Really? Because I have things set up to accept all message requests. You should be able to just send a message request. Let me double check my settings. It might be your settings. redirecting you to a support page. Now that makes no sense at all. That makes no sense at all. I don't know. So you sent it to me on Twitter? Wait, did I? 'Cause there was a message yesterday. Did I already respond to it? Because somebody about the Pine script, yeah. Well, oh, so is there two people that want Pine scripts? Because there was somebody in Discord that had already posted the Pine script that they wanted to have converted over to NinjaTrader. But you have another one. Is this a public Pine script? Because if you can just give me the name of it, I can just look it up. They're still selling here. Okay. The one yesterday, he posted some whole suite and then Hike and Ishi stuff, and I was like, well, Hike and Ishi might be more complicated, but maybe he just needs Hike and Ishi bars and he just doesn't know how to get them, or that whole moving averages are already in there. No, that wasn't you. Okay. It's kind of funny. I mean, there's kind of been, as of late, a lot more people looking to convert things from PineScript into NinjaTrader than usual. It seems that a lot of people are getting into the futures market because of TradingView, and then they immediately realize that TradingView isn't very good for futures, right? So you just trade based on price action and no DOM indicator? No. Oh, no. Wait, how did you get that from what I said earlier? No, I'm primarily the edge. So here's the thing. I combine everything that we know helps. Everything that we have empirical information to suggest that, like, that is a part of regular market behavior, we are factoring in. So that's going to include stylized behaviors of volatility, stylized behaviors of order flow, correlated instruments, risk management. But the primary thing, the place where the edge really has to come from for us on an intraday basis, because there are some things, like momentum strategies, for instance, but those are kind of like more swing strategies, right? What dominates the action on our time frame when we're trying to make a trade over the next 30 minutes is informational inefficiencies. We're looking for something that we know that the market hasn't factored in that kind of suggests that there will be an imbalance in the market orders. So in this situation, we are getting an imbalance in the market orders to the sell side, but I don't understand what is driving that flow, hence I haven't taken a trade. I'm on edge because I'm on the lookout for the Bank of Japan to potentially come in and do currency intervention. How that could affect our treasuries might be a little bit more fuzzy than usual, but generally speaking, it's going to push the treasuries up. So I'm kind of sitting here watching. If I see quick move up in the order flow on the DOM, then I might try and join it. Conversely, if I get some indication of why the treasuries are selling the way that they are, and that information suggests that there's way more selling flows to come, then I will get in a short. Okay, just checked TradingView, and it is an indicator called My Strategy. I only see from him this EMA crossover strategy. Oh, well. This will enter a long trade when the 21 EMA crosses over the 55 EMA and both EMAs and the close price are above the 200. Well, that's simple, my friend. I think you can figure that one out on your own, but I will show you where to look to figure it out. So, first thing we're going to do is we're going to come in here to the Ninja script editor. And this is going to be a strategy, right? So in the strategies, they have sample moving average crossover. Da-da-da-da. Okay. So let's just analyze the key components of this, and then we can use that to try and pull over this guy's stuff. The one I'm talking about is with RSI. I'll have to go back and look at the script. Okay. So we have moving averages. So first, there's the two most important methods in the Ninja script. Okay. On bar update. That's the method that runs at the end of every bar, essentially. It depends on what your calculation mode is set to, but generally speaking, this happens either at the end of the bar or on every tick. Okay. On bar update. And then we have here cross above is a method that takes 3 parameters, 2 data series, and then a number, like the number of bars to look back. Okay. So it's saying if the fast moving average crosses above the slow moving average, then we enter long. If the fast moving average crosses below the slow moving average, enter short. Okay. Now, also note that SMA slow is a private variable that is defined up here at the top. So we have a private SMA fast, private SMA slow. Okay. And then we also, in the on state change, this is where like the defaults are done and where things are set up at the beginning of the script, right? So here we can see where we instantiate it. We instantiate the SMA fast and the SMA slow, and you pass in a property. So properties are down here, right? Public int fast get set. So it's just an integer, nothing fancy, just an integer. And all of this stuff above it is just describing how it will display in the back tester. Okay, like it says this can be any integer. It's a property, etc., etc. Okay. But there's also here we set the plot colors, and we add the indicators to the chart. So if we're running the strategy on a chart, we'll automatically add the indicators. Okay. So that's all there is to that part. So let's come back here. And man, these things just keep selling like really, really strong. And I don't know what's driving it. Looks like Python. Because Python, so in C#, you'll have if, and then you'll have parentheses. And then the standard in the C# space is new line. A lot of people like to have that curly bracket at the end of this line, but in C# we put it in a new line. And then all of the statements between curly braces, right? In Python, you don't have the curly braces, and this is all determined by tab spacing. It just says, okay, here's an if statement, and then everything underneath of that is tabbed in, so that's all part of that if statement. Okay, so we are getting house price index month over month, negative spot 1 versus an expected spot 3. And K-Shiller 20-year is 6.59 versus an expected 6.6. So nothing too big there. We have an hour to the consumer confidence. I can't imagine that these aggressive sell flows have to do with consumer confidence, so that would be too early. Are you a programmer? Yes, I am. I've been programming now for, what year is it? 2024. I've been in the industry for 14 years, and I am a site reliability engineer, which means that I investigate applications that are misbehaving in production and try and track down the errors and fix the errors so that the website continues to function. Which means I do a lot of finding everybody else's issues and kind of deep dive things like, we're using too much memory. How do we use less memory? That sort of stuff. So, this is one of those, like, you know, you get am I egotistical and I just want to toot my own horn? I'm a pretty experienced programmer. And most of what we do, most of the programming that we do in NinjaTrader is pretty simple and straightforward. So if everyone uses the same AI trading bot, can it fail? Absolutely. A strategy being a little bit popular helps it, but a strategy being too popular will completely collapse the strategy. And I can show you some examples of that maybe later if we want. Or you can just go and watch my video on price action where I give you an example of that happening. Okay, so anyways, coming back to this script right here. Okay, here it is. So he has 3 moving averages and an RSI. And then he looks to see if the RSI is above or below 50. And then he also looks to see some information about the moving averages. So it's best to keep the strategy for you and not expose it 100%. I would know all of the stuff that I'm teaching you here on this YouTube channel is what I would consider base. Like, these are things that I think give you a fighting chance, but to really have success, you're probably going to have to find an edge beyond that. Now, because we can use informational edges, it's a little bit of a different thing rather than technical edges, right? Because the edges that are available change every day based on what's going on, right? Okay, but, you know, for instance, I made a video back during the COVID pandemic showing you a strategy that was pretty good at taking advantage of some of the insane trends that we saw back then. I wouldn't expect it to still work. We could go back and look at it. I haven't looked at it in a while, but, you know, it was a pretty good strategy for that time, but I didn't expect it to work forever. Okay, so when long condition. Close condition do sell. So I really do not like the way that he calculates this all. He's basically creating a bunch of Booleans and then deciding what to do based on that. But, you know, we can handle it. So here's what we're going to do. We're going to make a new strategy called, what was this guy's name? And I don't want to get your hopes up. It's probably not going to do very well. But let's try it. Okay. And then we have 3 EMAs. So I'm going to do this. I'm going to copy those lines and I'm going to come over here into else if state equals state dot data loaded. Okay. So we're gonna say EMA fast, EMA mid, EMA long. These are all private. I should do this in Helix. That's okay. Fast, mid, slow. Okay. Fast equals EMA, and we don't need to say the close in here, and we can just say here, fast period is what we'll call it. Right. This next one, mid equals EMA mid period. By the way, these should be capitalized probably. Slow equals EMA slow period. Okay. There was also an RSI. Private RSI equals, let's call it my RSI. My RSI equals RSI. And then what was he setting for the period of the RSI? Okay. Is he using the RSI anywhere else? No, he's not. Okay. So, RSI period. Now I need to create those properties, right? Ninja script property. Public int fast period. Get set. Da-da-da-da. Okay. Mid period. Slow period. RSI period. Then up here in the defaults, we will set these things. Fast period equals, let's pull this up over here so I can see it real quick. Fast period equals 9. Mid period equals 21. Slow period equals 55. RSI period equals 14. Okay. So now we can focus on these things. Close link. Okay. Yeah. So now it's all of this bit down here. Okay. Oh, RSI oversold. Okay. They do use that. Ninja script property public int oversold get set. Try and keep it consistent even though I screwed up the formatting there. Property public int overbought. Get set. There we go. Do by equals crossover or crossover. So let's look at what crossover and cross under does in Pine script. Crossover tells us whether a variable series crossed over another series. Okay. So, it is the same thing as cross above my RSI, comma, RSI, or oversold. And my RSI of 0 is less than 50. Semicolon. Same here. Cross below my RSI over bot, and my RSI of 0 is greater than 50. Fast mid 1. Oh, you didn't even need to include that other part, do you? Okay. Cross below. Fast mid. Okay, and fast of 0 is greater than mid of 0. And we don't use and, we use ampersand, ampersand. And, okay, mid of 0 is greater than, oh wait, oh okay, this, yeah, mid of 0 is greater than slow of 0, and lows of 0 is greater than slow of 0. Okay, there was a big buy there at 14.5, and there was some iceberging at 14.5 as well. So some sign of counterflow. I'm not sure I could call that the Bank of Japan buying that I was expecting to see though. Quite a decent range down there. I don't like that it takes action, but I would like to just have the alert. Well, you mess around with the settings with that, with the strategy. How many hours a day do you study the chart? Like hardly any. Don't waste your time looking at charts. I don't tell you a whole lot. Okay, let's do this one. EMA cross under. Oh, and you know what? These are Booleans. Bool. Right. Wow, big sell. I'm just glued to the screen. Oh, thank you. Okay. Bool EMA cross under equals cross below fast mid and fast of 0 less than, oh, that I might have screwed up somewhere. because that's fast of 0 and slow of 0. And mid of 0 is less than slow of 0. And close of 0 is greater than slow of 0. Yep, it is. This is slow. Fast, mid, fast, slow. Slow, okay. Now they could create these other variables, which I think is kind of silly, but whatever. Okay. Interesting. Okay, so if long condition, enter long. If close long condition, exit long. Semicolons. Okay. If short condition, enter short. If close short condition, exit short. Dun, 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 dun. Okay, it's complaining about our RSI. So let's just make sure I've got the right indicator here. RSI indicator. Oh, private RSI, my RSI. There we go. All right. All right. Moment of truth. Does it compile? Am I that good? No, of course not. No overload method for RSI takes one argument. Okay, what are the arguments? Period. Oh, smooth. So do they put the smooth in there? No, they don't. So we will just use the default smoothing, which is 3. Okay. Oops, over here. Smooth. Oh, and I guess we do have to, on all of these, include the number of bars look back. Okay. That was not bad. That was not bad. All right. So now there might be some other issues. So I didn't look at all of these things about like, you know, do you have enough bars and stuff like that? So we might have to deal with that. Strategy analyzer. right, here it is. It's got all of the defaults. We're going to run it on the S&P 500. 1 minute bars. We'll just run this year so far. Okay. Oh, it totally is taking trades. Oh, but it only took long trades. What's with that? That's not necessarily good. Short condition equals EMA, cross under, close equals do buy. That's wrong, isn't it? Did I make a little boo-boo there? Let's see here. Close. Yep, it should be like this. Oh, you want to use 15 minute? There we go. Okay. So that is good, but let's come and put it to the 15 minute. Okay. Okay. That actually comes out with a total profit. I'm quite surprised. And its winners are larger than its losers. That's actually really, really surprising. Okay, but now the actual real moment of truth, right? Is we need to go back at least 5 years. So we need to go back to 2018 actually, and include commissions. Well, I don't think that I have my account set up correctly, do I? Edit account, commission, lifetime. Okay. Okay, so it is profitable over that time period. It is pretty the Sharpe ratio is pretty awful. So can't recommend trading this. It looks like for the most part that the reason it's making money is because, you know, it makes money on its longs. But a Sharpe ratio of 0.1 is not very good. But we can come and look at the analysis of it. You can see it has pretty steep drawdowns. Can I go back all the way to 2014? I don't know if we'll... Actually, I think I should be able to go all the way back to 2008. So let me just try running it over 10 years. Might be because you're using a 15 minute. That's very interesting. That for a moving average kind of setup, that's not bad. That is not bad at all. And over essentially 10 years, most strategies do not survive the 10-year test and are like net profitable. Oh wait, do we? Okay, we are factoring in commissions. Man, $9,000 in commissions. Yeah, the Sharpe ratio, it gets even worse, actually. So, I'd say it's better than most, but I personally wouldn't trade that. Like in order for something to really be worth, like, trading, you want a Sharpe ratio over 0.5. Basically, if it's not over 0.5, you would have been better off just buy and hold. Let's come and look at some of the... Okay. It does look like there's a little bit of risk management we could kind of stick in there that would help a little bit. Interesting. Or one trade was worth $14,000 on it. That's pretty crazy. That's pretty crazy. Not sure what to tweak. I don't know if I would. To be honest with you, when it comes to things like moving averages, you're better off going on higher time frames. Now, it being a 15-minute, that might be a part of it. Like if we come back and we do it on 1 minute, let's just see. This will take a little bit longer. Yeah. On a 1 minute, it doesn't work. You're always going to generally do better the higher the time frame it is. But that's why, like, the higher the time frame is, the more that you have to rely on things like your Sharpe ratio to see if the strategy is really actually doing something. Now the other thing is that if I come in here and I switch the instrument, so like if I come in and I do it on ZN. Oh, wait a second. The overbought and oversold are not doing anything. That's a problem. They're doing 70-30, okay. Overbought is 70. Oversold is 30. City and Futures. Hey, good morning. See if that changes it at all. Might cause it to take less trades, so. Oh. Oof. That's interesting. Okay, so what's really going on here is this guy, he has a risk management thing in there that basically says that, like, if the RSI is overbought or oversold, get out. And that actually makes the strategy worse. Actually, I think what it was doing is it was saying you really, really had to get crazy oversold to do it, but you didn't have to get overbought at all. And so it held on to its runners and didn't, right? That's not good at all. So if we come back over here and we let's just comment out these lines where it exits the short so that it has absolutely no impact. This will be interesting because it won't get out of the trades. By the way, you see when I put the risk management in, it took more trades. Okay, yeah. Without that, it does terribly. Oh, man. That's super funny. They are. Yes. It's really... I gotta tell you, man, I wouldn't trade it. I think one of the things that happens to beginners when you're first coming in and doing these is you'll put everything in the back tester. Let's change these back to 0. That's funny. They'll come in and they'll look at that total net profit and see it be, no, wait, now that makes no sense at all. Wait, what? Oh, I'm doing it on ZN, that's why. So if we come back to ES. So it does 78. And then if we do 30, overbought is 70, 30. Ah, hey, that's actually did better. Okay. Okay. See, it was a little bit too funny that made it worse. But actually what it does is it gets them out of trades more often and lets it take more trades. Wait, hold on. That can't be right. Oh, well, because it's average losing trade. I was going to say. Okay. I was like, how is it getting 60% win rate? Well, your average loser is a little bit larger than your average winner. So, but again, the Sharpe ratio is awful. Awful. Also, the probability, well, that probability is not terrible. Probability is not terrible. But again, that's where I was going back to. Okay, so then I come in and I do it on ZN. Okay. Make some money, not very much. The Sharpe ratio was even more terrible. Let's do it on oil. Obsidian Future says, yeah, this strategy over the long run will lose money. Well, I'm not going to say that over the long run it will lose money as much as I will say that it's just not worth it. The amount of money you're making for the risk that you take on is just terrible. So there you can see it on oil. It doesn't do very well. Now you can do, so it would be interesting to do this one as more of a momentum strategy, right? Say do it on days and go all the way back to 2008 to start. And I think that these periods and everything will not work, but let's just try it. And also we have to get rid of the exit on session close to run it on dailies. Oh, I ran it. I should have switched it over to ESNet. We're running it on CL, huh? Oh, it's S&P 500 is open, so we should also come in and check. Okay, so Apple's still hurting, but can we see DJT now? Digital World Acquisition Corp. Hey. Let's get rid of this other, so we can kind of see. Not bad. And will it let me see like a 1 hour chart going all the way back? Ooh. But is that as high? It might be. Nope, it's not. I remember when I bought it, it was like 75 and I got out at like 140 or something like that. You think that it will dump? I don't know, man. I don't think so. You know, my issue with this stock is, you know, like in stocks, I want to be in on the long run for the most part. And I've seen the way that they manage this company, and I wasn't impressed. But you know, if he becomes president and he tweets exclusively from his platform, that certainly could bring in money for them. You know? So like, wouldn't bet on that though, that he would win. The question then though is, what would their valuation be? Like if Trump is president and it brings in as much traffic as it did his old Twitter account, how much money would they make? I don't know. So I don't think that that's a okay. So if your thinking is there's no way Donald Trump could win because the security state apparatus doesn't want him to win, I don't think that that's a very good way of thinking about it, because I don't think at this point that the security state is that opposed to Trump as opposed to Biden. I think that there's a lot of people out there that have kind of consigned themselves to the fact that Biden has just been a total dud, you know? And it's like, okay, we'll bring Trump in, and then 4 years from now we can get a real Democrat candidate in, you know? We'll see. Okay, so on a daily, it did work. Ugh. That is not bad, actually. The win rate is actually quite high. But your losing trades are way too big. We need to get the average losing trade to be the same as or lower than the winning trade, probably, to get a good Sharpe ratio. So, like, I could go in and I could add all of my fancy little things, like, okay, one thing that you can do, and this is kind of a little bit curve fitting, but I can come and look at the MFE and MAE and say, okay, like, there's a certain point at which we don't get any of these anymore. So, are there ones that have gone yay far and then turned into losers? Maybe we can adjust those. I think in this case it wouldn't make sense. But we can look at MAE and we can definitely say that, like, you lose more than 2,000 or 10,000 on a position that you should get out. So that would be a good set. Have you traded? I never put in an order in them, but I definitely remember and looked at the markets when they were still around. Yeah, Uzi says, I don't see anybody caring about True Social. Exactly. That's where it's like, will they actually make that much if it goes the way that they want it to? And I'm not sure. There is definitely this thing that, like, Trump could come in and just sell it. But I'm very, very doubtful that he'll do that. Maybe he might sell little bits over time, but for him to just, like, immediately come in right now and sell it would be, like, so stupid. So I think the play is hold on to it until you win. And then if you win, this thing could be worth like $1,000 or something. Like, I don't know what it would actually be worth from a valuation perspective, but from a like how many people will, like, pile into this thing with the hype and everything, totally, it could be crazy, man. But let's see how they fare today first. Do they build on this overnight action that they have, or does it kind of mean revert? It's going to be a key question. Anyways, so I think that should all give you a pretty good idea of how to do, like, the back testing. My overall observation, and I have back tested countless strategies. I'm on a new machine, so you don't have. On my old machine, when we clicked down on this strategy, there was hundreds of them, right? But strategies that are based primarily on a single price data series just don't do very well. And strategies based on technical indicators on an intraday basis just don't do very well. Now, once you start going outside of those boundaries that I just set, then you find some strategies that can be profitable. For instance, if you're doing it across a basket of assets, so you're looking for the signal across like 100 different futures or something like that, and you're doing it on a daily chart, then you have a momentum strategy and those can make money. And because you're doing it across a bunch of different assets, that's something that will really, really, really help your Sharpe ratio. And that's where people are able to get Sharpe ratios above 1. But I've never back tested. So like my qualifications would be that it's taking the average winner is larger than the average loser. The Sharpe ratio is larger than 0.5. And it's been back tested over 5 to 10 years. Never found an intraday price only single instrument strategy that does that. Not even close. So, you know, I programmed it for you. You've seen it. Hopefully that saves you a bunch of time, right? I'm going to close the back tester though. And the go. Now, I really want to work on my momentum strategies, but one of the keys for that is you have to do it across multiple instruments, and NinjaTrader's backtester doesn't really do that. So I have to do my own backtesting in Python, and I haven't gotten around to it yet. But soon. Soon. What else was we looking at? Do we want to look at? Oh, you know, let's look at New Scale. What is that one? SMR. Well, it's been on the downturn since that huge spike. Where do you get the data to backtest in Python? Good question. I forget. Oh, no. Norgate. Norgate was where I was going to go. Norgate data. So here, there's data packages, futures. So for $270, you can get access to their data. And the historical data extends back to 1980, or the first day of that market. They provide unadjusted and back adjusted. They have the multiple months. So yeah, has everything that you would need to backtest a real CTA momentum strategy. I don't know. I think I look at that DJT and seeing it take off does kind of make me think, like, should I be in on this wild ride? Because originally I got in on it. I got in on it early. I made a pretty decent winner off of it. And then I said, this is floundering. I got out long before it really started coming down. And I said, I don't like the way that they're running this thing. I don't like the way that the service is going. And now they've, the merger thing has actually happened. And now all of a sudden it's hype, and I'm kind of like rethinking it. But it's such a tough one. It's such a tough one because you're relying on the hype cycle and everything, and that's really difficult to predict, Have you modeled limit order book data too? Well, so I don't think that Norgate gives you the limit order book in that context. I have gotten actually not limit order book. Just I have data that tells you like every transaction. So remember for that volume profile video, I had to go and calculate the volume profile. And so I had to go and get back tested, backdated data in order to do that. It's kind of funny. I made that video and then Nobody has asked me about that since because I haven't updated the levels in a while. Right, as long as I do it once a year, it's fine. But it was like the people that do volume profile either ignored it or they saw what I did and said, "Oh, okay, yeah, it's not worth backtesting," and then they didn't bother backtesting it themselves. Just saying. Just saying. I was trying to figure out why am I leaving this open, and then I said, yes, because Reddit is still going up. Interesting. Well, we never really got the inputs along in the treasuries. I don't know why we dropped down here. In 15 minutes, we get consumer confidence, so that's going to be a relatively major event. Alligator asks about the decline, or rather speculates, could it be a rate lock? I don't know. It was an awfully aggressive flow, I tell you that. Oh, did we end the music's playlist? Yes, we did. You know, like it looks to me like the sell pressure is still there. So, oh, you know what, Andre? The other thing is that I've been saving the limit order book data, so I have the limit order book data going back pretty far now. So that's another thing on my list. Is now that I have data that I think is a little bit more reliable because the take replay stuff is not, then I can, you know, do a real back test on the algorithms that I was working on. Well, come back over here, see what else is going on today. Yep, Apple shares fall on Chinese report that iPhone shipments plunge 33%. Technical measures and valuations. Does any of it matter? No, it does not. Oh, do I have some stuff to go into? I do. I think I have a meeting I want to listen to at the top of the hour. Not a huge deal, though. I'm much better at Excel than Python. when you really get into it, though, Python isn't that hard. Like, it's probably the most accessible. And I really think that that's why the data science went down the Python route, because I don't think that Python is very well suited to the data science applications at all. But the people that are doing the data science sort of that, you know, especially like the really advanced quant stuff, are not necessarily programmers. So is the market changing its focus to consumer instead of inflation? Well, the market is not as worried about inflation, that's for sure. I'm not sure that it's necessarily the consumer that's driving the market behavior. But, you know, one of the things you got to remember is that it's the banks print the money, right? So banks are still making a lot of loans, essentially. I mean, and then everybody expects them to cut interest rates. It's all about the flows. We're reading around on social media here, see if there's anything important going on. Suspected Israeli airstrike hits northeast Lebanon. Well, there it is. Smart money at work, evidently talking about the almost what, $20 jump. That's almost like 40% jump overnight in Donald Trump, whatever it is now. Well, it's ticker DJT. Okay, let's see here. Eric Wallerstein, if you're wondering why Trump's SPAC post-merger climbed as much as 58% this morning, read some of the comments. I just bought more shares because of reasons. Let's make Trump a trillionaire, wrote Looney Tunes meets Karl Marx. This is not financial advice. Yeah. See, it's going to be entirely now based on the madness of crowds. And I don't know if I can predict in this situation. If all of the Trump supporters get in on it, you know, like, it could get crazy, right? It could get really crazy. I don't know. To catch some of the best trades, though, you have to do some degenerate things. I guess I could buy like a share or two. That would make me feel better. Okay, we got about 4 minutes. So I'm probably going to go quiet here. In fact, I think I'll probably hide my camera for a little bit. Put my account on safety. But yeah, we should only be for a few minutes, hopefully. That or they just blab all hour again, like last time. They didn't blab. They talked about important things. Okay, here comes the consumer confidence. Looking for a reading of 107. Okay. Still waiting. Richmond Fed was negative 11 versus expected 5, so worse than expected. Still waiting though. This is odd. "30 seconds, I still don't have the number." Okay, 104 spot 7 versus an expected 107. So that's probably likely to boost us up a little bit. Okay, so now I'm going to go quiet for a little bit. All right. Well, I don't know. There was some clicks there. It kind of still feels like selling pressure though. Like the buyers are trying to dig their way out in here and it's just like not going anywhere. I don't know what the cause of this strong sell is, but I don't have a whole lot of hope for it doing a whole lot in the next 40 minutes. We'll stick around. They're looking to reverse at 12? Well, we are below yesterday's lows, so you know that part does matter, but I was surprised how easily they slipped through 16 when they did it earlier, but are the trades taken automatically? No, I don't. You know, I've had some strategies and stuff run in the past, but not as of late. I usually will forget to start them anyways, which is kind of funny. But, you know, I'll do a back test and the whole story with that, because after 2020, I got really, really deep into trying to get an algorithm to work. And what would happen is I would, you know, have it trade the day, and then I would go back and have it run on the back tester, and it would be different. And so my conclusion was that the tick replay data, because they were all based on order flow, that the tick replay data was not effective enough, essentially. So they're right on the edge there, man. Good grief. Do you think that the whole bridge... Oh, what happened to the Pine script? And actually, it was better than I thought it would be, but the Sharpe ratio wasn't very good. It was net profitable over 10 years, but the Sharpe ratio was terrible. Yeah, the bridge incident was 100% on purpose. I mean, how would I know? How would I know? The whole thing is kind of curious. Watching, they're right on the edge here, man. I always find it really funny how, you know, we make such a big deal of new highs and lows, but the market will often sit right on them and, you know, like it's nothing. They don't care at all. That's something that you'd never have evidence for, and if said evidence did exist, you'd never know it. Okay, so then why would we have... Well, so you can totally... you could totally have suspicions, right? Like, I think that anytime that something like that happens, when, you know, you should be going down the list of things and saying, okay, was this actually intentional? But... even if you were like a government endowed investigator, you know, that was suspicious and whatnot, what would you be able to do to be able to prove it or disprove it? You know, it's a matter of intention. Does it even matter? Like, does it even matter? I don't know if it does. What matters is that it happened. I think it's funny how quickly the internet is like, we know what happened. It was a cyber attack because the lights went out before they actually hit the thing or something. Hitting a pylon, if you think about the math behind the space in which that thing is traveling, hitting that pylon seems like it'd be an improbability. Well, I don't know about an improbability. But one thing that I do know is that, like, boats of that size have so much momentum that, you know, like, it's already too late long before they hit it, right? I'm surprised how quickly yeah, me too. I would have thought that something like that would have, like, damaged that one section, not, like, brought the whole thing down. I mean, and how difficult will that be to replace? My mixed vlog said I'm better off using built-in triple EMA and configure alert in NinjaTrader. Yeah, you can totally do things like that. Like, you can any of the indicators that you put on here, you can, like, right click and go into alert, and then do things like, you know, if it crosses above this thing, then do an alert. In a blue city like Baltimore, it probably won't get replaced. How critical of a piece of infrastructure is it? At the very least, they have to clear out the metal, right? So that ships can come through again. No. Oh, hold on. DC Verx says, come on, gentlemen. Connect the dots. Look at the video. Someone set that ship on course to go. Wait, so you have video of the guy setting the ship on course to go straight into that pylon? Oh, no, wait, you don't? Oh, okay. So you don't actually know. They'll want to replace it. Democrats will run on for office on replacing it, but they'll never rebuild it. Well, it isn't Baltimore the same area where there's only like 5 cops for the whole city now and stuff? Holy crap. Yeah, no, don't worry, Mayor Pete is on the case. Dude, it's true. You know what? Being transportation secretary is usually the most, easy job. You just come in, you coast. There's not a whole lot to do. Okay. It is absolutely one of those positions that you give to key people that, dropped out of the race and backed you early. And, it's an easy prize to give them. And then you can kind of use that kind of a position to learn more about the government and help your campaign later. But holy crap, almost every little thing that has happened, you go and you look at Pete and it's like, it doesn't make him look good. and part of it has to be bad luck, because it's just not normal for this many significant issues that the transportation secretary would deal with to come up, It's funny because before all this happened, I would have said, hey, he might stand a really good chance. He might be a top contender for 2028 or 2024 or whenever it was, when he dropped out That's what I thought. I was like, oh, well, he might run again in 4 years. He'd probably do pretty well, right? Not now. I think he's done. I think that guy's done for. I don't think that even the Democrats would be like, yeah, we don't need this guy. But the problem is that they don't really have anybody else to run. Well, the whole reason why I was asking about, like, that they're going to rebuild it and whatnot is that, like, that whole port is basically shut down right now. So I don't know how significant that bridge is, how difficult it will be to rebuild, etc., etc. You know, is there going to be some sort of a longer term supply chain disruption from this? I don't know. Okay, so the dollar is moving here. So I am still not seeing the flow that I was keeping an eye out for the Japanese yen. But the dollar is strengthening here and the treasuries are selling in response. I think they'll get it cleared out, but rebuilt in a blue city, all those palms that need greasing, all the... Oh, I don't know about that, because it's like a national story. So I think that it shouldn't be too hard for them to get the government funding to do it and everything. But the chances of it being rebuilt are directly proportional to the importance of the bridge itself. Maybe it's not actually that important. Let's try and look. Okay, so what is it? What is it called? Francis Scott Key Bridge? Maps. Okay, so here's the Baltimore. Here's the key central ports areas. That's a pretty long bridge. But, I mean, people can go around. Maybe it's not that important. I find it a little curious that that's the story that perks your all interest. Like, I know it's there on the top of Zero Hedge, but, you know, like, people forget about these things so fast, right? Like remember the Palestine train crash thing? Oh my gosh, like, everybody was so uppity about that one when it happened and, like, forgot about it so quickly. Yeah, we forget about everything so fast, right? But it's just... So I'm trying to figure out what is it about that strategy, or that particular incident that perks your, you know, that gets you guys talking. But there's all the conspiracy theory around it already. Perfect environment to destroy things on purpose. Oh, let's see here. Let me read. Let me come back in here. An unclassified report from the DHS National Operations Center said the container ship lost propulsion before it rammed the bridge. Video seems to show repeated power losses on the ship just before it destroyed the bridge. Economic disruption along the U.S. East Coast is unfolding with potentially tragic human consequences after a container ship struck the Francis Scott Key Bridge in Baltimore, sending nearly the entire roadway structure crumbling into the water. The immediate priority of the rescuers is finding people who may have been on the bridge, either working or driving across the ship. Singapore-registered Dali was operated by charter company Synergy Group and is time-chartered by Maersk, carrying Maersk customers' cargo. So, like, what's the conspiracy here? That China convinced a Singapore vessel to do it? Westmore confirms that the ship's crew issued a mayday and communicated they were experiencing a power issue, enabling transportation officials to halt traffic over the bridge. So Uzi says, I don't think it was intentional. The secondary concern in the days ahead will be the tough question about the effect on business, commuters, holiday travels, and the economy across the region. The Port of Baltimore, the biggest handler of U.S. imports and exports of cars and light trucks. Oh no. Really? Okay, looks to be out of commission indefinitely. The resulting bottleneck could accelerate a shift of goods through West Coast ports. Another crucial question, which other ports have spare capacity to handle the ro-ro vessels that carry automobiles if Baltimore is closed for an extended period? So we'll probably have some disruption, or we'll probably be on cars. Great. As if, you know, cars weren't already messed up enough. You think Biden's going to be on that event like flies on poo? Yeah. Why is it that around 8:30 that my voice starts to get a little gravelly every day now? I guarantee this story will become about the racial demographics of maybe. Oh, there's gonna be some way that they can do that, sure. You know, there's gonna be a bill that is proposed that will give money to rebuild the bridge, but they'll also attach Ukraine aid to it. And then the Republicans will say no. And then the Democrats will say, see, you guys are being racist because you don't want to rebuild a bridge in Baltimore. Yeah, that one's easy. Easy to call. Come on. Okay, here's a story that's worth reading, I think. President Joe Biden has, according to a new report, spent the last 4 years laying the legal groundwork to fight Donald Trump in court should the 2024 election results come down to the wire. Given the state of Joe Biden's shrinking voting coalition, this may end up being a case of worrying about water damage while the House is still on fire. One of the more recent examples of Biden's base problems came from a New York Times Siena poll that showed just brutal numbers for the president. The poll offers an array of warning signs for the president about weakness within the Democratic coalition, including among women, Black, and Latino voters, the Times write-up noted. So I find it more than a little odd that, with Biden's numbers among core demographics dwindling, his team's answers to prepare for court battles rather than convincing those voters to come back. Enter noted political journalism outlet Rolling Stone with a piece detailing both Biden's efforts as well as expanding on the panic about dastardly election stealing Donald Trump. Long before Trump began leading in a battleground state polling and years before he was declared a 2024 candidate, the ex-president and many of his influential allies were already busy plotting ways to tilt the election in his favor. These years-long efforts, conducted both secretly and out in the open, have already yielded tangible results for Trump and the conservative election denier movement. These wide-ranging operations have alarmed the Democratic Party elite, who aren't just worried about Biden's sagging poll numbers. Numerous Democratic lawmakers, operatives, Biden campaign advisors, and administration officials tell Rolling Stone that if the president does ultimately beat Trump this November, the election will be exceedingly close. Over the past year, Biden has been conducting war games, crafting complex legal strategies, and devoting extensive resources to prepare for, as one former senior Biden administration puts it, all hell breaks loose scenarios. The preparations include planning for a contingency in which Biden's margin of victory is so razor thin that Trump and the GOP launch a tidal wave of legal challenges and political maneuvers to rerun his 2020 election strategy, declare victory anyways, and try to will it into existence. President Biden has been worried for a while now that Donald Trump is going to try and steal the election if it's very close on election day, says the source familiar with Biden's thinking. If that ends up being the case, we are also expecting the Republican Party to go into overdrive to help him steal it. We are continuing to build out the infrastructure to ensure that it doesn't happen again. If President Biden wins and Trump and MAGA Republicans try to confuse everyone and sow chaos. I am not sure I'd look at all the data available to me and think, you know what, we need a legal strategy, especially given that so far every legal effort against Trump this election cycle has only made him stronger. Frank Luntz noted that recently on CNN. I don't care about Frank Luntz. Biden has tons of problems just getting his own voters to the polls, so my gut tells me 2024 will be a lower turnout election than we've seen in a while if the polling about how middle-of-the-road voters feel about 2020 Part 2 holds up. But Biden's base is in tatters. Hispanic voters are largely shifting away. Black voters feel significantly less compelled to vote. Women aren't as motivated against Trump as they were. Okay, well... But that's been an ongoing thing since the beginning. The thing I was looking for in that article was, what are they actually doing? Okay, so they're just wargaming to prepare for it. Okay, that doesn't really tell me anything about what kind of maneuvers that they think could happen. Long volatility trade may be a widowmaker no more. 3 trends suggest that a turning point in equity volatility is near. Frank Luntz has a new poodle on his head. Really? That reminds me, I read this story the other day about how toupees are becoming a thing now. Like that, because the technology and everything is better, a lot more men are going and getting hair. And, you know, they have ways to integrate it into your existing hair and really make it look good. And, you know, a lot of it has to do with, like, women would get weaves and so similar thing. But, like, I don't know. Like, I just can't imagine myself paying for that and wearing something like that every day. Like I think it might be fun. I think that you guys might enjoy it, but, like, I don't care to, like, take care of a hairpiece like that and all that kind of crap, you know? It's too much work. That's the best part about being bald is that I just shave it like once a week, and it's actually kind of fun to shave it, and I don't have to worry about it, you know. Okay, so let's read about consumer confidence, shall we? After declining in February, analysts expected a small rebound in the Conference Board's consumer confidence print in March, but instead it dropped further to 104.7 from 106.7 as expectations plunged, but current conditions improved. However, for the 5th straight month, the Conference Board's headlines confidence print was revised. The Conference Board's headline confidence print was revised downwards. That's 13 basis points of confidence erased in the last 5 months, to which we ask again, how do you revise consumer confidence? I don't know. I don't know what they base those numbers on. Or I think I do know, but I don't remember. You got a great head for being bald? Well, thank you. I remember going out, like the first time I did it, I had a barber do it. And I was like, what do you think? He's like, oh, yeah, your head will be, it has to do with the size of your head and you'll be fine. It's been good. The other thing is like, do you dye your beard? Because it's turning gray. But I just don't care. If my wife asked me to do it, then I would do it. But I don't think she cares either. The Conference Board's indicator inflation expectations rebounded modestly to 5.3%, still notably high, but trend in the right direction. The board's labor market indicator trended mostly weaker, and finally, expectations for stocks to increase from here at their highest since January 2018. That did not end well for stocks. This story about the volatility trade switching around, I think is a little bit too long for us to read right now. So, come on, I want my throat to be cleared. I'm sorry, that probably sounds awful. Like a Jeep trying to start and not starting. It seems like Oh, actually, it does. I think it does. It's called something different though. What is it called? TEMA. There you go. That's it. I'll prove it. Indicators. TEMA. Triple exponential moving average. Da, 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 da. How does it work? Well, you take 3 EMAs and it's basically an EMA of an EMA of an EMA. So this EMA is an EMA of this EMA, which is an EMA of this EMA. Okay, so let me tell you about this because this is fun stuff. Okay. Yeah, 9, 14, and 55. Okay. EMAs suck. Kind of. So what does it do? The whole issue is that if you've got a trend, let me close this so I can draw some pictures. I'll draw some to do this. Move this over here. Bring my little pad down so that I can like more easily draw here. Okay, so if we've got a stock and it's going like this all over the place, right? Okay, we want to smooth out all of the noise, so we want to go and then it goes like this, and then it'll go like this, right? Right? Okay. So that's like your simple moving average, and the issue will be that like we don't get the signal to go short until like here, and then there's not very much left in the trade. So there's this whole thing about you want it to smooth, but you also need it to be responsive. Okay. So if you make it more responsive, then the issue is that you'll get more false signals. Okay. So on an intraday basis, when you're using an EMA, I can come into NinjaTrader. I have a little indicator that basically will allow you to compare all different moving averages against each other. I don't have enough time to do that right now. If it was early in the session, I'd do it. Or maybe you could ask me tomorrow. But it will back test every moving average and tell you when you trade it based off of, there's like 3 different ways that you can trade it, whether it's rising or falling or crossovers. Okay. It can backtest all of those different types, right? And EMAs perform the worst. And why is that? Because they give too many false signals. Conversely, though, when you're on a daily basis, being on the day time frame already kind of filters out a lot of the noise for you. And you're not going to get as many false signals because of that. And so when you get onto a daily basis, the thing that matters the most is having a really responsive moving average. So when you read the Jack Swagger books and all of these other things, because I got to tell you, some of these people that traded momentum strategies, they would intentionally said things to mislead people, right? Like, oh, I can come in and I can talk all about how it is to trade technical analysis, etc., 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 and just never say that, oh, by the way, this is a daily strategy, not a day trading strategy, right? And so you will hear these people talk about EMAs, and that's why I think that a lot of retail traders are interested in EMAs. But I'm just telling you, the backtesting says EMAs and like double and triple EMAs work great on higher time frame daily bars, sort of momentum strategies, but do not work very well on an intraday basis. Now, something that does work very well on an intraday basis and really gets out a lot of the noise is the super smoother. So Lizard Indicators has one. I think they're all over the place, but these are basically, there's this guy named Euler, John Euler's. Maybe you'd pronounce it differently, but I think it's Euler's. And he wrote a bunch of books, and pretty much every indicator on an intraday basis, at least, that I've ever tested of his performed better than the other ones. I still wouldn't put it at the, it meets the qualifications for me to trade it, but they all work better. And what he's doing is he's using a lot of really sophisticated math to take out some of the errors. So for instance, the super smoother is a very sophisticated way of smoothing out the thing without it getting rid of the responsiveness. So it's still very responsive. So like that is my best tested, like basically if you put a super smoother on and then you take whether the super smoother is rising or falling as your signal, that actually works pretty well. It's break even. It's break even. So that's the best moving average on intraday data that I found. Okay. And then another one that's about on par with that is whole moving averages, which kind of use like the average of the bar and stuff. So it's also a way of making something that's smoothed out, but is still very responsive. So you can approach it that way. I just gave you some real edges there. But we have videos about these. You can go back and die, but it's way back there. But the video where we tested all the moving averages, for instance, and you can even then start using machine learning to say like, okay, let's test all of the different. What if it's a 50 or a 90 or whatever, right? But the best tip that I can give you, though, man, is that if you want to day trade, backtesting moving averages is probably a waste of your time. The most important stuff on the intraday time frame is going to be breaking news, sentiment, those sorts of things. You could totally look at the daily charts to see if the asset that you're looking at is going to have momentum that day. But all of this chart nonsense doesn't really work on intraday data. Your wife is doing an AI PhD, but she doesn't want to help you? Well, that's because she needs to read machine learning and finance. Should watch that because because they're so here's the thing. A lot of people think, okay, I'm just going to take this data series and this data series and this data series, and then I'm going to input it all into the AI, and then the AI will spit out when to trade and when not to, okay? You can do that, doesn't work very well. Because basically what happens is the AI overfits. When you run that sort of a thing, the AI always overfits to it. So, you kind of have to understand the real applications and limitations of it. Once you've gone through all of that and you understand it, it can do some really powerful stuff. So, get her the book, and then maybe she'll be maybe she'll be interested in it. You could go back in time and change your degree to pursue a different career path. What field would you? Well, I don't think I would. I think that I still would have done computer science. But if I was going to shift around, I would have tried to do more of a math, statistics, quant finance sort of a degree. You know, if at the time I had been focused on doing quant stuff, maybe I could have gotten into that. But that's the whole thing, is that, like, if I was doing that, I wouldn't be able to do this. I don't know. Retail day trading sucks, but I really enjoy it. Somebody has to do it anyways. Well, maybe you would have made more money doing quant stuff, but you know what? I make pretty darn good money doing site reliability engineering, and that was something that I'd been obsessed with since... I mean, like, I know I'm 38, so it's kind of like, you know, did computers even exist when you were a kid? But they did, okay? I was using a computer when I was 5. We had an 8088. So I've been in on this stuff basically from the beginning when it was available to consumers. And so because of that, I think that either way, I would have been the happiest doing the programming as a day job and finance as a side gig. Maybe I'm wrong, but that's how I feel about it. My daughter is watching with me, but thinks you see me, so wait. Oh, hello. You shouldn't underestimate the effects of trader superstition on markets. Well, I mean, the whole thing is that people trading something does affect the markets, right? It's just that, again, a strategy being a little popular kind of helps it. Strategy being a lot popular totally destroys it. So, you know, if you want me to trade something, I need some evidence that it actually, like, works, right? And the issue is, really the issue is that I'm too smart. I know that that's like such an egotistical thing to say, but it really, when it comes down to it, I really think that it is one of the major issues here, because most people, they don't know all of this stuff. They don't know how to program it. So they just, they'll just blindly trade the things that they're told, and the things that they're told usually tell them to take on a lot of risk. And so they'll take on a lot of risk, and some of them get lucky. Some of them get lucky, and you know, that can only go on for so long, but some people, they're able to do it for a long time and have some success with it. Whereas me, I already know what happens long term, and so I don't take those kinds of risks, right? My standard is really high. And that means that most strategies don't meet the standard. But I think that, you know, if you really want to have long-term success in markets, that's kind of the standard that you have to have. Like, you need to have something that works for 5 to 10 years. You need to have something that has enough statistical data to prove that you really have actually found a real statistical aberration in the market. You have to be able to deal with all of these different biases that come in, like curve fitting, selection bias, etc., etc., etc. So, anyways, I can backtest just about anything you want. I really hate, like, Because usually when I say that, people say, okay, well, what if you have this EMA and this EMA? Now, listen, I've tested like billions of versions of that. It's not interesting to me. But you got something new that's new and unique, and we can backtest, then I'll backtest it. And we'll try it, and we can see if we can prove the theory that you have, if the market really does behave that way, and make money from it. Meta is going to change with each new batch of Rubes, though? Well, yeah, but that's the whole thing is like, so it used to be a thing. So I'll tell you, here's one of the things that really kind of killed my desire to look at these sorts of things. Before 2018, the generational algo space was like huge. And basically what these algorithms would do is they would, look at every possible indicator that they have, these huge library of indicators and so forth. And then they would say, what works the best right now? And they would constantly be using this algorithm and adjusting it for those market conditions to trade what worked best. And they would kind of shift. It would kind of be like, okay, so there's like this strategy, and this strategy. We don't know which one is actually going to do well today. It depends on what kind of a market it is. So then all of the effort went into trying to predict the kind of market that it was going to be and all of that sort of stuff, right? Okay. Which was very, very difficult. And like the space was getting bigger, the profits that were coming from it were becoming less and less and less. And then the volatility crunch of 2018 came. And all of those firms went out of business. It was just like a complete collapse in all of those generational algorithms. And when that happened, that was when I was kind of like, because I was seeing this stuff too. I was seeing like, oh, I get these algorithms, I got this strategy that seems to work well, and then this that works well in this time period, and you just have to know which one it's in. And is there a hidden Markov model system that you can use to predict that sort of a thing? There's some sort of meta about what, how it changes that you can predict, right? And then the quant crunch happened, and they all got screwed. So, all right, guys, I gotta get going. I will see you tomorrow. Stay excellent, team.